All right, thank you so much for staying with Business AM, for staying with Metropole TV. You can get talking to us on our Twitter, Facebook, and YouTube pages at Metropole TV. KE and me at Tabitha Muthoni G on Twitter. All right, and now it's that time for the economic review, where today we are talking matters NSE, matters NSSF, and let us start with NSSF, where the Auditor General has put NSSF investments on the spot. And now a recent Auditor General report now shows that pension managers at the National Social Security Fund, NSSF, spend 64 shillings out of every 100 shillings delivered to beneficiaries, which according to the Auditor General is a poor performance of fund which hemorrhaged billions of shillings in doubtful investments. The report shows that the fund oversaw a 56.7% decline in returns from 20.6 billion shillings in 2018 to 8.9 billion shillings at the end of June 2019, translating to losses of 12.4 billion shillings on the Nairobi Securities Exchange alone. The Auditor General was quick to note that despite the dismal performance and the loss of funds through sour bonds and fixed deposits, staff, administrative and provisioning costs went up to 5.7 billion shillings in 2019, up from 5.1 billion shillings in the intervening period. And we see NSSF lost 996.4 million shillings in fixed accounts, and corporate bonds at Chase and Imperial Banks invested through Britam, Gen Africa, Old Mutual and Stanlib 666.9 billion shillings in bonds cannot be recovered, and pensioners have been setting aside provisions to cover the losses. However, it recovered 53.3 million shillings from Imperial Bank and 53.9 million shillings from Chase Bank out of the 329 million shillings that were deposited at the two lenders in fixed income accounts. All right, before we delve into that discussion, let's look at the data. We have seen what's happening, and now looking at the NSSF annual contribution and benefits, we see the years 2015 at 92.09 million shillings, and that is the annual contribution, and the annual benefits paid standing at 3999.2 million shillings, and the year's 2016 annual contribution 9486.2, and the annual benefits paid, that is at 48. I think can I see clearly? All right, so there you have it. I can see quite well. 4839 annual contribution paid for the year 2016, and 2017 annual contribution, we see it at 9491.4 million Kenya shillings, and annual benefits paid at 4356, I think that's 43 or 4856.3. That's for the year 2017 annual benefits paid, and 2018 we see it there going up, and 2019 as well at 10,065.2. yes, that's the annual contribution paid, and the annual benefits paid for the year 2019, that's 5333.5 million Kenya shillings. That's the NSSF annual contribution and the benefits that you have seen for the years 2015 all the way to the year 2019. All right, and I'd like to introduce our panel for the day today, and joining us is Collins Oluoch, who is a lawyer and economic expert. Good morning, Collins.
Good morning. How are you, Tabitha?
I'm fine, thank you, Collins. And we have Robert Karuye, who is an investment analyst. Good morning, Robert.
Tabitha, thanks for having me. I think we're going to have a very nice discussion.
Great, great. And we have Mr. Chacha Bichenga, who is a financial literacy coach and author. Good morning, Bona Chacha.
Thank you.
All right, great. So I will start with you, Bwana Chacha, and we have seen the numbers there. And the Auditor General has raised concern about operations at NSSF after management failed to explain the differences in records kept with actual money in some of its bank accounts. Is this a case of poor management or straight corruption? Chacha.
Okay, thank you, Tabitha. As the Auditor General has noted, the huge loss incurred by the National Social Security Fund, NSSF, is indeed worrying because NSSF is responsible for collecting money in terms of savings for retirees. It is responsible. It is also responsible for investing the money in ventures or vehicles that can make much more money. So now, when it to pay retirees, the fund is sustainable. So I would say that what is happening at NSSF is a case of gross mismanagement, which take various forms. One, there is mismanagement in terms of the investment decisions that are made. Because one, we have realized that NSSF has lost a lot of money in terms of the fixed deposit in various banks. It has also lost money of the corporate, and it actually comes in the wake of the collapse of two main banks. We have Chase Bank and Imperial Bank. So you'll find that the investments may be by itself in investing in the deposit, in investing in corporate bonds, have less losses.
Yes.
We have also investment in terms of real estate property, where NSS, for example, were told in around 2017 was unable to collect 100 million shillings, which was supposed to be obtained from the land that was sold to a company by name AMS Limited. And that transaction took place 2011. Up to 2017 and up to date, that money totaling 12 shillings has not been recovered. Thirdly, we have the operational cost where directors of the NSSF board are paying themselves huge taxes more than what the rates are. For example, it is around 2017 or thereabouts. The board paid themselves to the tune of around 6 billion shillings, which was more than what was given to retirees here. That is gross mismanagement, and that was for decision part of the government to expand the board and also legislate come up allocation the NSSF funds from gross mismanagement. Thank you, Tabitha.
Great. All right, so let me come to you, Collins. You've heard Chacha say it was a case of gross misconduct. And the question you're asking, is this a case of poor management or straight corruption from your point, from where you sit as a lawyer, as an economic expert? What can you say about this? Is it still a case of gross misconduct like Chacha have said? Do you agree with him? Or what clearly are we seeing here? What can we perceive from all of these, Collins?
I think it's, just the vision for NSSF as it was created, paper number 10 of 1995, provided by retirees and claims money that they've made at time employers. I don't remember any time in the history of this country, right from 2010, where NSSF was on sort of tax scheme. In 2015, NSSF was on spot because of savings. So something close to 5.6. limited
Okay, Collins,
contributions.
Collins,
Yes,
I
of
have to cut you short.
some payments
Collins,
were.
we have an issue with your internet connectivity. Collins, can you hear me?
Can you hear me?
All right, maybe you can take that up again. There was an issue with the internet connectivity, Collins. Just to recap on the question, Chacha says this is a case of gross misconduct, but what is your take on this, Collins?
Equally, with regards to gross misconduct, and equally an issue of leadership. As I was saying, right from 2014, NSSF management. As I said, in 2014 they were on spot because of the Tasha scheme. In 2015 they were on spot because of retirement savings rate. In 2019 they were on spot because of losing 5.6 billion on unremitted contribution. In 2019 they lost 48 million on the social security house. They lost 2 million money that ensured that land, purchase of land, and that land was later, the titles were revoked. NLC. Then the issue of Mavoko land, we had the issue of 143 million a claim by a Chinese done work. So an issue poorly, and I think if you look even at case law, there are a lot of cases people have taken NLC to court. For instance, I remember the case of Republic versus NSSF town Kuyu, where this town council of Kuyu was saying they should not be meeting to any of the poor mismanagement, asking the court to get refund from NSSF, and they did cite them and rule in their favor because actually found out this is a case of mismanagement. I don't remember a time we've had a case of labor who not been summoned to explain the issues of mismanagement of funds at NSSF.
Okay, great. All right, Robert, you have heard what Collins has said. You have heard what Chacha have said. And clearly, it's a case of gross misconduct, mismanagement, and what we have. And according to the report, the fund oversaw a 56.7% decline in returns from 20.6 billion in 2018 to 8.9 billion at the end of June 2019, which has clearly translated to losses. You've heard what they have said. They have analyzed the losses that we have had from 2010 to 2014. But what is your take on this, Robert?
Thanks once again, Tabitha. So Collins and Church have actually laid it out. And I'd like to add that it's also about the accountability. And these are some of the issues that also the former General Ouko had actually highlighted. And so the public audit, the attorney general, to maybe go after these people and find out in depth what is the issue, because some of the figures also that were provided, the Attorney General could not account for them. So look at a lot. It's actually very figures. These are 2019 figures. We haven't yet factored in COVID period. So it's only how the figures might look like when they come out next year. Because looking at fair gain valuation, because when you look at it, it's actually lost of 93 billion, huge figure from a profit of 2.9 2018. So they've also shown figures of how their profits have been performing for the year, but I think that they owe Kenyans much more, because when this fund maybe gets into this problem, you'll find it's most are having in or below maybe the level of income who are likely to suffer. So I think accountability, when you look at the investments, there is a party risk that is out, because they had investments in and Chirac. They had corporate bonds and fixed deposits to the tune of above 7 billion, which is quite a significant amount. And although they brought in fund managers to invest on behalf in bonds, it's something that can be highlighted, because this is something that from a risk perspective, that they were able to trust these two banks with such huge amounts of money, and of course it's the risk of ordinary Kenya.
Yes, Robert.
That is true. And now I'm just wondering how the figures for 2020 will look like, because I think for NSSF, it's probably in the coming year.
Great. And do you feel, or should the investment vehicles for the NSSF be heavily regulated by the government? What's your feel on this, Robert?
Well, for them, I think the agenda is their order. So in this way, entity them into the additional regulation will be helpful, because you see it's the decisions that they take in-house that are bringing this, and maybe they got a bit leeway period of about 1 year when you didn't have an auditor general, so maybe they took that opportunity. But even they keep on publishing results, they keep on raising issues, and NSSF, the same still remain. For example, as in Towers, which was maybe actually a couple of 6 billion was given for that 6 plus, but it was actually close to 60. It's still not reached the auditor general as this. For them, it's not regulation. All this will be these people at least be accountable for the actions, because even for the auditor general raising issues, we would even be knowing, and these funds that mandatory, of course. So it's not an issue of regulations. I think it's more of an internal issue, where the organization itself has to look at how it's structured all their operations, because things like reconciliations also them. So for them, it's just in the internal issues that need to be sorted out more than bringing in an external regulator.
Great. Collins, let me come to you. And should the investment vehicles for the NSSF be heavily regulated by the government? And what is the likely scenario when the government actually really takes over the regulation? Collins.
What I think that we do not have a problem of laws or a problem of regulation in this country. The problem we have in this country is just unwillingness. Yeah? For instance, look at SSF. All the laws that we have, we have strategies, we have policies that they have crafted. There is just implementation. They accountability, efficiency, transparency, and not about legislation in government control over these sectors. I think we need to focus on the role of Parliament in this growing mismanagement. Because management has been on right from, you pointed out, right from 10 all through 2019. You've not seen into this apparatus. So you Parliament is speaking strongly into the kind of leadership that we have. Summoning leaders, putting to task to explain to Kenya why are we having shoddy investments at the end of the day? Things that are not worked about. Why are we having problem with regards to implementation of the strategy? What is the problem that is controlling the leadership of the board of NSSF for it? Then go to coming out to call NSSF to call NHIF. I think it's time Parliament trains its eyes on how to reform for benefit to Kenyans. It's not an issue of legislation. We have enough legislation. The issue is unwillingness to implement legislation. Following.
Great. All right. So there we have an issue of a lack of policies or legislation issues in being an issue in the country when it comes to regulation. And Chacha, let me bring this to you. Collins has talked about the, legislation issues in place. So what can you say, maybe the legislation that or policies we should have in place to cover pensioners' money just in case of losses? What are some of these legislation that we should have in place? Bwana Chacha.
Okay. I think in matters, my colleagues are arguing the problem is not a problem of regulations, policies or laws. It's a problem of ethics. However, say that we have certain clear-cut regulations can, for example, guidelines which can provide guidelines, for example, on where to invest the NSSF funds. We can have regulations in terms of, let's say, percentages. For example, how much should be invested in terms of maybe bank deposits, maybe fixed deposit, should be invested in terms of government securities, how much should be invested in terms of corporations, and also how much should be invested in equities and property. And also we should have regulations. Can you hear me?
Yes, I can hear you, Bwana Chacha.
Hello, can you hear me?
Yes, yes, we can hear you.
So we also need
yes.
also regulations that when we have cases of gross mismanagement, when we have, for example, huge allowances, we need to have a policy framework to govern, give guidelines on the allowances so that we don't have people just decide haphazardly to allocate themselves theft allowances. So also to have application where people who are entrusted with the responsibility of managing NSSF, what action can be taken in case of management. Really, our law to do with the corruption, anti-corruption here, may be too weak. For example, the anti-corruption board and sectorial powers, they are taken to court, for example, do not really lead to imprisonment or fines. So we need to have a watertight kind of regulation in terms of capping and cushioning the NSSF against gross mismanagement. Thank you.
All right, great. There we have it. Now, let's move on to the next talking point that we have today, which is the government bond draining NSE investors' wealth. And a total of 146 billion shillings in paper wealth has been wiped off the local bourse over the last 2 weeks as the focus shifted to the government's tax-free infrastructure bond. The NSE market capitalization dropped from 2.93 trillion shillings mid-August to 2.78 trillion shillings as trading ended Monday as part of what was a 7-day consecutive slump. The top 5 blue chip counters, which account for 80% of the market, lost a combined 139.8 billion shillings in paper wealth, with Safaricom leading the losing pack with a loss of 112.1 billion shillings, with equity following closely with a 14.3 billion shillings loss. KCB lost 6.1 billion, East African Breweries 5.7 billion shillings, and Cooperative Bank 1.4 billion shillings. Now, the last 2 bonds have been oversubscribed, with the January paper seeking 50 billion shillings, attracting bids worth 125.5 billion shillings, and with CBK taking up 81 billion shillings. And in the April bond, the government had a target of 60 billion shillings, where investors offered the government 88.6 billion shillings, out of which the CBK took up 81.9 billion shillings. I'll start with you, Robert. Now, analysts say that the decline has coincided with the issuance of the 75 billion shillings 21-year infrastructure bond floated on August 23rd, and whose sale ends today. And looking at data represented by NSE, it indicates that despite stock prices appreciating by 394 billion shillings to August 24th, the market has lost almost half of its gains. Now we have that August and September NSE market capitalization. Looking at it, we have seen, yes, August it was up at 2850 million shillings all the way to September, going down. We see a decline all the way to September. Maybe, Robert, you can help us understand why we have this market trend at NSE. Robert.
Okay, thanks, Tabitha. So it's actually interesting because we saw the infrastructure, the important things to highlight from from the bonds term. And also, there's no tax obligation, of course, on the bond, which is an added incentive for investors. So in the paper wealth being reduced in the market, we actually saw that actually for the bond we actually released yesterday, and they match because you've already highlighted that around 146 billion was shared for market, and we had the bond itself received 151.3 billion shillings, which is 217% subscription rate. So you can see how eager investors were to go for this bond, because of, first of all, its high yield nature, and also the effect of its tax obligation. And so the government now accepted 106.8 billion. And what happened is that what you can see is this trend that investors are maybe looking at a more averse option to the market. It could be also that investors are actually just accumulating their gains, checking their gains, and maybe shift the fee, because when you invest this, at least you have that fixed aspect of your returns. You'll get your coupons of 12.7%. You won't have any tax obligations. So we can see why it's attractive to investors, and that has led actually to the growth of the market in the last couple of weeks.
Great. Chacha, let me come to you. And how can we interpret this fall in wealth amid the sharp decline in a rebounding economic environment? Chacha.
Okay. The decline actually in the Nairobi Securities Exchange can be attributed to the action of the government to float an infrastructure bond. And the issue about infrastructure is that they're attractive for three main reasons. One, their interest rates, they give a higher coupons, actually of around 13%. And the other thing is security. So investors really prefer to invest their money where they are assured of their returns on investment. Three, it's the case of cash flow, because infrastructure bonds here give regular returns, let's say after every 6 months. So investors, because of the hostile economic climate occasioned by the COVID-19, prefer now, maybe some are selling their stocks to go and invest in the infrastructure bonds, which give reliable, dependable, and secure returns. And that partly explains why we have had a dip at the bout at the NSSF. You can think of last week, the top 5 blue chip companies, for example, Safaricom, initially had hit a high of 44, 45. But by end of last week, Friday, it had come down 42. KCB had also closed at the tune of 46. East African breweries traded at 175, cooperative at 13.5, meaning that initially there were gains in the previous 2 weeks or so, but because of the floating of this bond, investors shifted their focus from the stocks to the infrastructure bond, which is more reliable, more secure in terms of the returns. I think that is the reason why we are bad. However, the economy is slowly gaining, and with the time, these stock prices are likely to increase. So I think there is no reason for worry. So investors need to still have confidence and inject more money into the Nairobi Securities Exchange. Thank you.
Great. All right, Collins, I'll come to you. And since we have mentioned Safaricom, and you see that Safaricom led the losing pack with a loss of 112.1 billion shillings, and equity followed closely at 14.3 billion loss. Collins, The Safaricom stock was clearly benefiting from the news of entry into Ethiopia and the recent confirmation that the Horn of Africa nation will soon allow for a mobile money license. Collins, is the government infrastructure bond more attractive than the Safaricom stock?
I think it is. CBK wanted to raise 75 billion. And the market offered CBK 151 billion. To me, this is the case of it reflects delayed investments. To me, there's a lot of money that is not being invested. I think this money is not being invested because of political instability. What explains the infrastructure bond, according to me, is, for instance, you look at the private sector credit. Since the removal of the interest rate, the private sector credit has not moved. And IOTA has not moved. And so I've been thinking, have the banks been lying to us? And this really explains to me the huge appetite as to why people are going for infrastructure bonds.
Great. Robert, let me come to you. Colin says a lot of money is not being invested. And is this a reaction to the infrastructure and an indication of how liquid the market is in 2021? Robert?
Yeah, thanks. So actually, Collins has actually brought out a crucial point in that the political instability. Remember that the elephant in the room, of course, in the investment, maybe funds or the investors themselves, that next year we have elections, and already you can see that the political tensions are already rising. So when investors look at their options currently, they look at the fixed income market because they'll still get that return, they'll still get the return on the investments even next year. But when you look at the NSE, the market, it could be that it's likely to underperform as investors pull out. You've highlighted Safaricom and Equity were one of the largest decliners. And we have to know that these are actually two of the best performing stocks so far in the market. So this is clearly a case of investors who are taking profit and shifting their focus to the fixed income market. For the liquidity has also been increasing in the market. We have, when you look at liquidity, you look at the interbank rate, which is currently at around 3.8%.